Hello everyone, and welcome to my Setup Pro deep dive. We're going to go over my Setup Pro settings, and we're going to go through each one, explain what it is, how you configure it, and what you get out of each configuration. Think of it as a quick guide around how to use the indicator. Visually, what you see on the main chart are the higher time frame that's mapped to the current time frame. We'll go through the settings to show you where that's set up, but basically here 15 minutes is set up for 4 hours. 5 minutes is set up for the 1 hour, and the 1 minute is set up for 15, for example. And you can configure it however you like. It's different settings, whatever works for you. You can set it up here. On the main chart, you will see what looks like setups. These are actually drawn by the indicator. It's showing you there's an entry with a stop with 3 targets drawn here. Entry with stops, 3 targets. And that's because the indicator evaluated a condition on the higher time frame, found your setup, and drew it on the chart. Now, to be clear, this is not a signal indicator. It's not looking for trades for you as far as algorithms go. You define what's your criteria, and the indicator will go find them for you. And you can backtest it. See, for example, my setup works during those times and in that market condition. However, it does not work in those market conditions and those hours. If I add certain conditions to the indicator, now I can look at different variations of what works and what doesn't, and when should I take a setup or not. It gives you the ability to backtest visually to see what's working for you, what's not, and decide if it's a trade worth taking. Once you find your right setup that works for you and your trading model, you leave it on, leave it alone. You can set up alerts to alert you when that happens. And what it will do when a setup is found is going to draw it for you just exactly like that. If the trend is bullish, for example, it will draw you saying, here's a trade, just an example, and show you the stop, your entry, and targets. Let's take a look at the settings. The first set of settings here you'll see are a time zone. Those are the most common time zones available. And these affect your scheduling around what's your trading hours and the time you want your alerts. For example, you don't want alerts in the middle of the night or 2 a.m. You just want them during trading hours between 8:30 and 4:30, for example. Next one is high time frame candles. If you enable it, that will hide the higher time frames. Now, you may or may not want to do that. The reason to hide it is that if you subscribe to the ICT high time frame candles, which comes with my setup, so you get both of them if you subscribe to the ICT high time frame candles. And what that gives you is not just a mapped time frame, it gives you all other time frames, and that's configured. You can change what you want to see there. But it lets you see what's going on across different time frames. For example, we came into a volume imbalance, we bounced, we're coming back up basically right there. It also shows you the trend bias for the different time frames. All of the time frames you see here, they were bearish. You had an order block above them, so all of them came down. The weekly is crossing the order block, however, did not close yet. And allows you to visualize what's going on better. For example, the 5-minute time frame was turning bearish. However, if you look at the 15 minutes, it just was revisiting a fair value gap and is going to continue higher. So that kind of gives you a better visual around what's going on. Coming back to my setup, because they work together, you can hide the higher time frame candles. Let's show them. You can hide the drawings only, the lines that show up here. That way you declutter the chart if you don't want to see the actual different alignments of where candles start and end. Or you can hide even the PD arrays. I don't want to see PD arrays drawn on the chart. Just show me the setups themselves. Keep the chart very clean. And number of setups you want to see on the chart. If you are backtesting or you want to see how your indicator works over time, your setup works over time. For example, we defined 25 different setups, and now it will draw 25 setups, and you can see the ones that worked, what time they worked, and you can go backwards, see, okay, that failed here. what could I have done differently? What other criteria I can add to it to avoid this type of loss? Or you can decide, for example, this is not a trade I want to take. This happened at 7 p.m. I'm not sure if you're trading those hours or not, but the 10 a.m., 11 a.m. trade would have worked, and so forth. You can walk through the after hours are failing, the noon hours kind of working, just depends on the length of it and entry criteria. You can visualize it and see what's going on with your trades, bullish, bearish, and what works for you based on that. Now, these works based on the bias itself. It's a direction of the bias. That means if 4 hours bearish, only show me bearish setups. Do not show me bullish setups because that will be against a trend. If you do trade against a trend, for example, the morning open, you're looking for the Judah swing or the coverage of the morning gap, you can turn it off and that will show you both bullish and bearish setups if there are any. For example, right here, you see bullish and bearish setups. And now you can decide yourself if that's a trade you want to take. What it does is skips the first condition around bias and just continue with any setup. Let's do that here. Now, the main criteria that you want to define for your indicator, for your strategy, is a high time frame condition. This indicator is kind of like a fractal model, works with a high time frame condition with current time frame setup entries, and third step is confluences, something to make sure you have the right settings for you to take an entry. In the settings, the first one is wait for high time frame candle to close. What that means is this setup will not show up until that candle closed. For example, that one there, zoom in onto it. This setup right there, that's based on this candle swept that high and dropped below it and then closed. So that setup will not show up until this candle would have came down here, came back up and closed right there, somewhere there, right? When that happened, then it would have drawn the setup. Now you need to make the decision if that's the Tau setup you want to take, you want to wait for it or not. The other option is that if you say, I don't want to wait for a higher time frame candle to close, I just want it to happen right away, which means the minute this one crosses above and drops below, show me the setup. You can do that here. The disadvantage of doing that is that sometimes it will come up, drop, and continue back higher. Now you have to work with different confluences and different conditions and make the decision yourself around, is it valid sweep? Do I get the right entry? Do I want to take that trade? And so forth. The higher time frame conditions to check by default, and they work fine. The first one is sweep of previous high or low, and this is for the high time frame. Sweep previous high and low are these here. This candle swept the low and closed above that low. It also swept the high, closed below that high. The direction of the bias will dictate if you're going to get long or short setup here. If you disable it, it will evaluate both sides. These would have been valid. They're marked in red because they got swept. And those are the previous high and lows. Sweep previous high and low and close back into the body. Now into the body, a little bit confusing. It's really into the body or higher. For example, if this is checked and this is not checked, what that means is this one swept and returned back inside that body. That's a valid condition. However, this one swept the low and did not come back into the body. That's not a setup. You're saying I want it to be above the close, the lowest of the open or close. This would have been valid. It crossed and went above basically the close of this candle. That gives you a long setup right there. The third one is sweep of any previous high and low. This is a high time frame liquidity level. If you have a high time frame, assuming this is, for example, the higher time frame, that chart is right there, just to see more candles. Any previous high and low, it would have been, for example, this low here, that higher time frame came in, swept that low, then it will find setup here. You're not just relying on previous candle, you're relying on any kind of previous candle. This one came, it did not sweep it, hit it. This one came, swept it, and came back up. Imagine those happening here. We just don't have that condition right here. But basically a sweep of any higher time frame pivot low, that's considered liquidity grab. It did that and reversed. And again, by default, you get both of them checked. You can decide what you want to do with that, if you want to take both conditions or not. And the last one is the creation of a short-term pivot. A short-term pivot is 3-candle formation. You have a low, lower low, and a higher low. That's a pivot. On the close of this candle, it will evaluate it and tell you there's a setup here or not. Same, there's no high one here, but that's kind of the same thing. Pivot, that's higher than the two around it. On the close of the last one, it will fire up and give you a setup. Now, this one will always work on candle close. You cannot uncheck it. That's because it's a pivot and requires a candle close. After the higher time frame condition is met, next one becomes step 2, which is your entry criteria. By default, it is defined to take an entry based on CISD/order block. It's the open of it. For example, that's open of an order block. That's open of that order block. And you can define your entry based on a wide range of criteria. First one is order block levels, the high or low. For example, if you set up a high or low, it's going to move to actual low of that order block, not the open. It would be, let's zoom in here. That's an order block. That's the low because it's bearish. If it's bullish, we would have taken the high. The entry, we want it here, not there. Otherwise, would be the open. You can say the MT, the middle point of the body. The candle that crossed it, the high or low, for example, this order block, this candle right there, you can say, I want my entry on crossed candle. The minute the candle cross it, then do the entry there from here to here, because that formed an order block and it closed. We're going to take that entry right there. You can see here you have different levels of entry models, fair value gaps, the fair value gap formed, the inverted fair value gap, you're trading inverted fair value gap, the fair value gap level itself, the open, middle, close, or the candle that crossed it. Breaker block and its levels, and the unicorn model, if you want to take a unicorn model close, basically. And same thing for the stop. You can define your stop based on order blocks. If we're saying, I want to take an order block, the low in here, you can say, I want to take the other side of it. And that gives you the other side of the order block. It's coming from here. It's going to be to there. From here to there. So you can say, for example, the stop is based on the order block high and low. Let's change this one from cross to the order block high and low. Now we're saying I want an entry based on the order block itself. This is the order block from low to high, and that's my setup. The difference is that order block may not be the highest candle. Maybe there's a wick higher. It just gives you the order block range, and you're saying I'm okay with the trade as long as it stays within the order block. The next one is the type of target. Do you want to make it risk to reward based? The risk is the entry to the stop. You're saying I want to take risk to reward multiple of that range. Or do you want it to be on projected level based on the order block itself? Now, in this case, it's the same because I'm taking based on the order block. However, if we had, for example, a pivot point and an entry based on, say, a fair value gap close, if there's a trade that matches that, that will be different than the projected range. Let's show charts. The projected range is that range right there. It's going to look at that order block, and it's configured in the system right now is from the range of the order block itself, projects it to 1, 2, 4, 5, and so forth, and that's configurable. We'll look at the configuration, but you can change that. For the setup itself, you can say, I want my setup to be 1, 2, and level 3. You can remove 3 and say, I want it to go to 4. If it's set up to a projected level, it's gonna match that projection. You're saying, I want to take the multiples of that. That'll be my target. And again, you can see and look, see, does it work, does not work, how often it works, and so forth. That way, you know before you take a trade, historically, how your setup would work, what's the best conditions for it, and so forth. And if you change the risk reward, it will not match that. It will match based on whatever that criteria is, because this is like, I don't know, 10R type setup. This will be the 4R setup, regardless of what the projected level is. Next comes the colors. The box drawn, the entry to the last target is in green. You can change the color if you want for bullish, bearish, or however you want it. If it's not confirmed, if it's blue, which is the default color here, that means we do have a setup, but we have a condition that was not met. It's blue. We know there's a setup forming. It may confirm or not. That way you're ready for it, or say, okay, I'll take it too early. I'm confident with it or not. It'll be green or blue, and your stop is the entry to the stop, and that's red. Target price levels. This is the 1R, 2R, 3R, 4R. But we said we don't want 3R. It's hidden behind this one. It's just saying 1, 2, and 4. And setup width. This is just the width of how many candle wide you want it. You can make it, it's 1 or wider. It's up to you how wide you want to make it. Next is, let's keep it at 4, the required for setup. And these are optional. These are a way to enforce your setup. For example, if your setup saying, I want to take it based on an order block, but I don't want to take any setup unless it has an inverted fair value gap. I want to make sure that a fair value gap failed. For example, if we look here, for this setup here, there's a failed fair value gap that went through it, came back, went down. Now there's a setup because there's an inverted fair value gap and an order block. Same here. Setup will not show up. It will be blue until price closes below here. Now it's red and saying, okay, we want to do retest of it. Something like this, you may want to take an entry based on the inverted fair value gap itself instead of the order block because it might be higher. Or you can keep it that way and just say, okay, this is not a trade I want to take. It's just too far for me. I'm just going to eye it and see what happens. You can make those decisions as you like, but the required setups are order block. For example, you can say, I want to take an entry based on a fair value gap, but only after order block has formed. I want to make sure I want to take an order block and I want to have a fair value gap, any fair value gap. I don't care where it is. For example, there's a fair value gap there. That's a valid setup right there. There's no fair value gap here. There's no setup. Or saying, I want a fair value gap, but it has to be after the order block. It can span it or go after it. That becomes the setup there. Setup was not going to confirm until this fair value gap forms. It ignores that fair value gap above there. And that's because you want to make sure there's a displacement below and coming back and going lower. And again, you can refine your entry. Something like this, general rule of thumb, if you want to take an entry based on order block, you take the high and low, if there's a fair value gap after it as an entry, the fair value gap itself. If there's no fair value gap, you may want to take the open as an entry because there's nothing to stop it from coming back to the order block. Next one is inverted fair value gap. It will find inverted fair value gap here and make the criteria. You can make it also as an entry. If you define it as an entry here, you don't need to define it here. Same thing is going to find it. Next one is breaker block. Breaker block is a failed order block. This is a breaker block right there. It came down, went up, came down below it. Now that's an order block. You can require it to be a pivot or not be a pivot. Not required a pivot, that means the last down candle before the move higher, it's kind of still the same. I'm not sure if we have any other setups like that, like right here. That's not a pivot, but it came down, it went up, then came down. That's a very strong setup usually, because the assumption is it's going to move higher, and it formed a resistance candle, an order block, and then went below it. Now, the option to have required pivot, that will also apply to your entry here. If you select a breaker, it will use the same type of required pivot or not for your entry type model. Now, when we said we wanted to require pivot, it moved it to the last one here, because that kind of created a pivot and moved higher. It came back, tested it, went lower. For example, in this case, if you'd have said, I want my entry to be based on, let's say, the breaker block close, it will change your setup drawing to become basically right there. That's the setup it formed when this one closed here. It came back, tested it, and moved lower. You get to define however you want to set them up. Again, backtest it, see what works for you, how you want it to work, and go from there. The last one is a unicorn. And unicorn model is an overlap between a fair value gap and a breaker. We have too many drawings. We'll probably reduce the drawings on the chart. But in this case, that's a unicorn. You have a breaker. It shut below it, came back and left an open area, retested that unicorn and dropped below. You can take a trade based on that if you want to, or you can have it as a confluence, which I want to take a breaker entry if there is a fair value gap created like a unicorn model, or you can make your entry again based on the unicorn itself. These are the simple steps. Step 1, high time frame condition. Step 2, your entry, stop, and targets, and the type of risk you want to take. And step 3, optional, what confluences you want your trade to have for you to take a trade. If you're doing based on not having directional bias or not waiting for candle close, I would highly recommend having some kind of a required option. That way you get some kind of confluence. For example, a fair value gap after an order block or a breaker, that gives you some kind of a confluence saying a PDRA has failed and now acting as a resistance in a breaker case, or fair value gap shows a displacement. We think, okay, we have some kind of strength, and I'll make a decision if I want to take it or not based on that, because it's not going with the trend or so forth. Okay, the next option is change state of delivery. This option plays 2 roles. In ICT terms, if we look at, let's turn this one off for a minute. If we're looking at this candle here, the green candle, let's zoom in and let's turn on favorites. The change of state of delivery is the open of the last up candle. That's the change of state of delivery. And usually, if you're very aggressive, the minute it wicks through it, you can say, I'm good, I'll take an entry. It's an aggressive entry, but I do think it's going to reverse here. And sometimes it will wick and not reverse. You have to have a strong confluence or reason to believe it is changing direction. Or you can say, I want it to close below it. I'm going to ignore this one, and I'm going to wait for this one to close below here. It doesn't have to close below the low. It just can be anywhere in here below the open. Now, it's called change state delivery. That's because we're moving up, and that up candle failed to maintain the price above it. That means it failed. Now, it changed direction, it changed instead of delivery. However, as you can see, that can happen in different areas, and that's more around price action and how to read price action. But in this case, for example, that's where state change delivery, changed in state delivery. Order blocks, however, they form when the low is crossed. We have change state delivery here. You have an order block here, forms here. When it closes below it, now you have an order block. You want it to be strong move away. That gives you a stronger order block to view. You can also take an aggressive order block entry, which is step above change state delivery, which is when this was live and we through it, you can decide to take an entry. You risk of it coming back up and going the other way, but that's kind of an option that you have. Those are the options that you have here. Now, the indicator itself, it uses the option for change state delivery to say, okay, the candle must close above or below the order blocks or that candle's high or low. If you want it to be very aggressive, just say, I want it to wick above or below the open. That means if it wicks just by wicking here before it closes, aggressive CISD entry, that's what I want. I want it to wick below the high or low, and that's an aggressive order block entry. Or I want to close above the open, which is aggressive CISD entry, or close above or below the low, which is now you have an order block. Just make sure there's a displacement, fair value gap that gives you a much higher probability, like here. That's a high probability entry to take a short. That's what changed the delivery and the configuration. Let's show this one here. Next comes the drawings, and these are just more visual settings. And it's up to you to decide what you want to show or not show. There's a CISD line here. It's a very tiny candle. It will show you, for example, when it's coming up, it will show you there's a CISD here, so you can see what's going on and take an option. Right now, it went past the price action, overlapping it. And size of the label. The projected levels, these are the numbers right here. 1, 2, 3, 4. Again, let's zoom in. You're saying, I want to see them. And it's combined here because they are based on the order block itself. You can say, I want to see the projections, or I don't want to see them. And I want to base the projection either based on the full block high to low, or I just based on the body range, small body, just from here to here, project that down. That's much smaller than saying the full. And then again, that, for example, if you can take an entry based on the order block body size only and say, okay, just project me 2 levels of that body, that gives you an ability to see that. Next are fair value gaps. You can color them whatever colors you want. You can, for example, orange, make it very prominent, and that will highlight any fair value gaps on the chart. Inverted fair value gaps, breakers, right there. And unicorn, which would be the overlap of breaker and a fair value gap. We have a small one right there. That's a breaker, and there's an overlap there. Okay. Highs and lows. These are the liquidity for the high time frames. We're saying we want to have 5 above, up to 5 above, and up to 5 below. And they can be mitigated or not, just depends. Crossed, for example. That means at some point it got crossed right there. This one, it's previous candle, not highs or lows. Next section is previous candle levels. These will show you on the chart, for example, let's move to current. You have this previous candle level, that's previous candle. You have the high, the low in the middle. That will show them on the chart itself. We have too many drawings, but this is the high, the middle, and the low. That's the previous levels. And show and keep swept levels. If it gets swept, make it red and just keep it. Don't take it out. Just keep it on the chart and show me the last 5 swept levels. Next section are the projected move settings. These are fib levels. ICT refers to it as standard deviation. It's really just a measured move, not standard deviation. Standard deviation is something different, mathematically speaking. As we can see here, there's a setup forming and switching colors between confirmed and not confirmed right now. But here you have a projected level of 1, 2, 2.5, 4, 4.5, and 5. I unchecked the 5. Now you can uncheck and check whatever you want levels wise. You can color them whatever you want. For example, I want it to be the 2, 2.5. I want it to become red. Just visualize it, and let's say 2, I want it to be red, so I can see what 2 to 2.5 level looks like. Show me a left border, and their styles. For example, you can make it a standard line. You want it to be 1 through 4, whatever you want it to be. The width of it 4. And what do you want to see? So I want to see the level. I want to see the level and price. And use scale for calculations. Usually we use log scale, and you can turn it off. It becomes arithmetic scale. It's less impactful on NQ because of the size of the price. If you're trading Forex regular stocks, that becomes important. If you turn off this one, turn it off here. And the label, you can have it left or right. You can decide what location you want it. That's your control over it. The next ones are the higher time frame ones. The body, if you want to do, for example, white and black type plain setup, or if you have a contrasting different color, you can change what those looks like. Remember, this is an order block, not candle, so that's not going to change the color for it. Distance from current candle, start drawing after equivalent of 10 candles in of years, just to give you more space, especially like when you're zooming in. Then the space between the candles, just 1 candle width space. Imbalances that show up here, their colors. Previous levels that show up here. The swept level, I want it, if it sweeps it, that red line right there. These are the order blocks. Orange for bearish, blue for bullish. You can change the colors. And you can decide what levels you want to highlight. For example, high, low, open, empty, or you can just say, just show me the open. I want to see all levels. Then it will just show you the open line and move the label over there. That's an order block right there. Next is the main chart settings. Draw the divider right there just to see that this is a 4 hour. 4 hour starts here at the end there each candle. You can turn it on and off. Show me the time of the 4 hour candle. And remaining time will show up there if you want it, but it's already there. Next, labeling. For that label, you want to have what color up and down, just near or align. Basically, where should it be near the price. Remaining time, and candle time will show you the actual time above the candle, just in case you want to know. For example, I want to map 6 to 6. You can now see them right there. Next section is trading hours. I trade, for example, 8:30 to 11 and 1:30 to 4. Enforce these rules for me. What that will do is setups will only show up between those times. You're not going to get any setups during lunch and anything before 8:30. If you enable those, then that will be restricted here, and even your alerts, basically you're not going to get them because there are no setups outside those time windows. Next is the pair time frame. These are the default pairing, 1 to 15. If I go to 1 minute, I will see the higher time frame, 15 minutes, and that will be the condition for my setups. 5 to 1 hour, 15 to 4 hours, 1 hour to 1 day, 4 hours to 1 week, 1 day to 1 month. You can change this however you want. For example, I want to trade the 3 minute with the 30 minutes. You can do that, and now your setup will be based on that. If you go to the 3-minute, you'll see 30 minutes here. Let's do that. Go to 3-minute. It's mapped to the 30 minutes. And now you can see the setups based on 3 to 30. And the last option on that row is really, that's just the number of candles. Show me by default 10 candles. If you want to see 2 or 3 or 4, I just find 10 to be happy medium. You can see enough usually to make a case, but you can change it if you want to. And the last section are the alerts. What type of alerts you want to get, and if you want to give it different names. This is helpful if you have multiple setups. You can say setup 1, setup 2, setup 3, so that when you get the notification, you know the type of setup that you have. Or you say if you have A plus, B, C type setups, and you'll have multiple of them. So you can get different notifications with the name of it and decide when should you get it. So limit it to trading hours. Setup confirmation, just notify me when setup turns green, confirmed. On trend reversal, trend reversed, basically we were bearish, now the higher time frame turned bullish, notify me. Or just simply on a high time frame condition met, we're saying if swept and closed above it, for example, send me an alert, let me know the condition is met. Now I can come be ready just in case a setup happens. If you're trading very low time frames, so you may want to be available to it just in case you step away. If you're doing multiple different setups, try to have, different versions of the indicator for each one just in case, so that you can switch between them and see the setup visually. Otherwise, you're going to have to come back and change the settings for each one for you to see it. So this is my setup. These are the settings for it, and you can get it with either the ICT high time frame candles. Subscription to that gives you both, or you can get it as standalone. Thank you for watching, and if you have any questions, please feel free to reach out to me.